All right, good afternoon, everyone. I think that was one impactful session that we had. And now let's move on to this discussion. So first of all, I'm pleased to welcome the entire audience and as well as the panel here for this, I would say, forward-looking discussion, because when we talk about crypto, that's the stance I'd like to take. So the discussion today is on crypto's crossroads, India's path from uncertainty to opportunities. And today, I think, when I look at these speakers, we have like a stellar panel because they represent, I think, the entire spectrum of this ecosystem. So right from education to tokenization to innovation and with the policy. So it's like the whole gamut that we have here. Before we begin, I think, while she's given the introduction, but I'll kind of add my two bites to it. So let me quickly introduce myself and the speakers here. My name is Neha. I head marketing and communications and user growth for India's one of the first crypto exchanges, which started in 2014 called ZepPay. And I'll be moderating this discussion. And joining me here is Ekta Mourya, who is a crypto lead at FXStreet SLU, who brings in like sharp insights into investor behavior and market analysis. Then we have Kamlesh Nagware, who is the founder of Global Tokenization Forum, who is like, in fact, a pioneer in blockchain standards and tokenizing finance. And then I would say one of my ex-colleagues, Aishwarya Gupta, who's a global head for payments and RWAs at Polygon Labs, who kind of bridges, gaps between traditional finance and Web3. And then we have our very own Dilip Chinoy. He's also known as Dilip sir in the industry, who's the chairperson of BWA, which is Bharat Web3 Association, who leads the policy and the industry dialogue for Web3 finance. India's Web3 future, rather. So first of all, thank you all for being here. And then let's just dive into the conversation. One thing, when you think about crypto in India, be it blockchain, Web3, we all were just discussing this backstage, that the time, like we are at a turning point currently, because regulations are still about evolving. I would say there are certain businesses who are experimenting, investing in crypto. And when you think about investors in general, be it like retail or institutional, everybody is watching this space for sure. This is based on like my personal and professional experience of the last 3 years, especially. Like everybody has that curiosity. Everybody is tapping the latest developments. But when you think about global markets, so crypto is, it's discussed, or it has moved beyond trading, right? Like the Web3 and blockchain is powering multiple use cases today. So payments is, yes, one thing, but there's tokenization. People are talking about remittances, also cross-border payments. So let me set the stage here. I want to ask coming back to India, I want to ask like a big picture question, which is like, how do you see the current regulatory environment in India influencing the growth and innovation of crypto and blockchain technologies in the near future? So, Ekta, would you like to?
Yes, that was a very good question. I think two words come to mind here. This is an opportunity for the Indian government to build clear regulatory frameworks for the industry, because this is a time when a lot of countries around the world are discussing treasury strategy, where they are adding Bitcoin and Ethereum to their balance sheet. And Bitcoin's big break above the $100,000 milestone has just captivated the media and the audiences. So this is the time for these kind of dialogues, and this is where the future of crypto in the country will be determined. In our country, about 7% of the population owns crypto, and that is actually way more than the percentage of intraday traders at the stock market. You tell me then, don't we need clarity in regulation in a country like ours?
Absolutely, absolutely. I agree with that. I think in last 1 year, that the percentage of people entering this industry has increased. It's just that needs to reach out to more people. We need more frameworks. But I'd like Kamlesh to kind of give his opinion on that.
I'm audible, right? Yeah. So I think in my perspective, Web3 is two sides in India. One is completely crypto industry, another non-crypto, the technology side. So in both the fronts in India, there lots of work is happening. So whether you talk about the crypto or the layer ones, layer twos, exchanges, FIU, so everything is driving that thing. Another side of where the government or the institutions are building on the use cases side, whether it's a CBDC, whether it's a national blockchain framework, and now even education is also coming very clearly, like association like Bharat Web3 Association, India Blockchain Forum, all is trying to educate the both ministry side to the user side. So I think like maybe regulatory is not clear yet, but I think in maybe 1 or 2 years we can see clear like how the coming in the US.
Right, right. Fingers crossed for that. Aishwarya, over to you.
Yeah, I think from Indians' perspective, the biggest thing is like we don't have clear crypto laws, and that has been like one of the biggest problem or bottleneck in the industry to actually grow in home. I think back Polygon started in India. We had a big office. We almost employed around 200 people in India at that time. And the funny thing, like what happened and how we have to ultimately move out was they implemented GST on the gas fees. So now the gas fees is something that people pay, or is just like a fee when you go out and trade. At that point, you have to pay a fee. Now, in normal trading market, that is like the platform fee. And when you put that platform fee actually goes back to the company who is actually running the platform. However, when you talk about blockchains which are decentralized, the fees is taken by someone who is validating the network, which is not us. So we essentially the notice that came to us was majorly saying that you have to pay fees for all those validators in the form of GST to the government. So we are not making the money, the validators are, but we have to pay the tax for that fees that is getting accrued. So I think that happened, and effectively we had no other choice but to kind of start migrating most of our businesses or like foundation out of India. So I think, and after that, I think we kind of like moved our bases like 3 years back, and from there we have almost taken 5,000 startups from India outside India, which have not been able to flourish in India. And like outside India, we've got them funding, they are doing really well, they're connected with the government, everything's happening. So I mean, that is the blunt truth about India right now, where we are. And over time, I think this is exactly what is happening. So people who were genuinely building, a lot of them have left. And people who were like, okay, we don't care about the laws, regulations, or people who said that, okay, we can fight, they are someone like who are still in India. We as Polygon are still in India, but like our offices are not. So from that perspective, that is what the current scenario is. And I think that is why what is happening is, like we as Polygon also, like I think I work with almost 50% of the Fortune 500 in the world. And even like in India also, we had this partnership with Reliance where they launched GeoCoin. And so all these partnerships still happen, but the kind of growth that all these things take place outside India versus the way they are in India, that's like a very, very big difference.
Absolutely, Aishwarya. I think that is as direct as it can get. Thank you for that. Having said that, I'd say that is where this discussion and the panel discussion and the clarity is what we're talking about, right? Like today, obviously, a lot of booming companies or the enterprises have moved outside of India because the regulations are somewhere, the frameworks have already been in place. But given the economy or the population that we have, eventually whenever we kind of take that decision or streamline it, and I'm sure like our government would want the entire era, like our Indians to fall behind from this entire era of innovations. I think we are pretty, I mean, I would say that, we will expect the positive movement. It might be slow, but that's how I think our history has been too. We will, I mean, UPI obviously is one such example. So crypto, yes, we are slightly far behind. It's the entire gap of education, I would say, is a big gap between the overall globe and tech and understanding as compared to, like what we've traditionally seen. But moving on to, I think, Dilip sir, maybe you can summarize this big picture because you coming from the regulatory background and the policy makers. So
so I think what Aishwarya said is true, right? And what Kamlesh has also articulated is true, right? So the challenge here is that in the last 3 years, from 2023 till now, the regulators in India, or the potential regulators in India, have through first the G20 process, second through the FATF process, third through the IMF and FSB and ISCO processes. These are all international regulatory agencies in the financial system, right? come to understand about regulation and different aspects of regulation, and not only the trading but also staking, about getting paid in tokens and etc., etc. And I believe that given the current situation where we have the governor of RBI, ex-finance ministry, who was involved in this, the head of SEBI currently who was involved in this, the IRDA chairman who was involved in this, so the constellations are kind of falling in place for people like Aishwarya and all to have dialogues with the ecosystem so that they understand what's happening. But I think the biggest challenge here, and this is the most important and goes to Ekta's point, that if you lose money in the stock exchange, right, you don't say anything, normal. But if you lose money on a crypto exchange, I'm not talking about hack, if you lose, all hell breaks loose. One company lost more money in 3 trading sessions than the total capitalization of the entire crypto sector. It's a global number 1 to 10 company, you all guys know it. But no one even said anything about that. But okay. But crypto, if you go, no, this is rug pull, this is there. So I think as investors, as users, you have a great responsibility, not to create, all sorts of hype and commotion and, all of this. Quietly do whatever it is, take a loss, take the gain. But, the more you yell and the more you scream, the more social media posts you do, the more difficult it becomes for companies like Aishwarya's to work in India.
No, first of all, beautifully summarized, Dilip sir. That's the situation. And also to your point, when you're saying, like comparison to stock market, it is, we are talking about the mother market, which is more than hundreds of years old, to like a market which is 15, 16 years of old. So it's still very, very nascent. So these conversations are about to arise, but I agree with you. Like, let's just figure, I think more effort needs to be given as to if globally people are moving forward, how can we kind of go in that direction to explore it for ourselves, for our benefits and the Indian users. So let's move on to a little bit, we've kind of somewhere in this conversation, there is a need for education for sure. And Ekta, you are on the front lines with that, I would say, where you kind of gauge user sentiments on a daily basis. And like I said, when you think about investors, be it like a retail user who might want to invest like 5,500 to about like an institutional investor, everybody is watching this market. So what do you think from your vantage point, are the factors which are influencing, or which can, rather I would say, are influencing the confidence in users' mind in this Indian crypto market?
Thank you. That's a very wonderful question, but I'll keep it short here. The 3 factors that come to mind. The first one is trust. The regular everyday trader that's flooded with a lot of headlines and through Google News and on their phones, there's just so many notifications. You keep reading about it all day. You may have heard or followed a lot of crypto educators, and then you will read this headline that CoinDCX got hacked and then all hell breaks loose, like sir said before. So these kind of things just shake the trust or the foundation for the investor who's just getting started in the space. But as a country which really boasts about a 1/5 of the world's crypto trading population, a 1/5 of that is in India. So I would say for a country that does that, the investor maturity is a little low, and that can definitely be groomed and it can be improved further with the help of good insights and access to the right information. That is my second point, access to the right information. Don't expect to get your 2 cents of investment knowledge through scrolling on the internet, following somebody on Instagram and TikTok. No, my friends. It is all about doing your own research, trusting registered advisors, trusting analysts who have the expertise to give you the right kind of information about the market, to keep you on your toes about the right headlines and market moving events. Just because somebody said something about a token or that's popping up on your news feed does not mean that that's the next Bitcoin or the next big thing. It all comes down also to the ease of access. So in India, back when crypto exchanges were getting debanked, I was working at a crypto exchange back then, when suddenly Indians were rushing to withdraw their funds from exchanges like CoinX, and they were not able to. because banks suddenly decided that exchanges do not qualify as the right kind of client for them, and they do not have the right regulatory clarity on it. So incidents like these raise the question of how educated even our regulators are. In the US, you see that all the top executives that are being appointed to important places, like their central bank, like their SEC or the IRS, it is filled with people that have the knowledge about crypto, that have also disclosed their own crypto holdings. How confidently can we say that about our Indian regulators? Do they even have the right expertise to start this kind of dialogue? And what can we expect from a market like this? I think until the right guardrails are in place, we are all on our own. And the best we can do is keep ourselves educated until then.
Thank you, Ekta. I think this was pretty detailed, and you've also covered like all the angles here. I mean, investor education is the key, and that goes by for all the markets, be it crypto or otherwise. But let's take a step further. I mean, let's also explore that. Okay, this market is going up, and there are multiple use cases that are that are coming about globally. So let's take a deep dive of a protocol which is made in India. And Aishwarya, with that, Polygon has been at the center, with respect to bridging the traditional finance and Web3. So from your perspective, say, enabling like a transparent or scalable payment solutions and for real world assets in India, I mean, how are you carving the path or carving way from India's perspective?
I think, so couple of things which are happening. So from a perspective of Polygon, I think payments is one of our bread and butter now. We process around 43% of the total global payments, which are micro payments, less than $1,000 globally. So, and like effectively, like the way we are looking at it right now, there are three things that we are doing. One, like engaging for sure with the regulators, trying to make them understand. So now and then, like I think with BWA and with other like partners of ours, we keep like having those interactions to explain more like how these things can effectively happen. The second is like continuing investing in the companies. So like I think we are continuously like investing in tech, which effectively where the companies in India are trying to go out and build some solutions. So that has been like the second big thing. And the third thing has been like taking Indian startups globally. So a lot of Indian startups like that I'm talking to in India who still are in India, they always want to go for the globe, and this is something that I think we are proud of. We were like able to take an Indian startup to the globe, and we just want to not just be successful, but we want to replicate that. So I think a lot of that has been happening there. So like tons of companies who effectively have businesses in India, like especially in payments, like a lot of payment effectively is like cross-border payments, even though like stable coins have not got that like from a government support side yet there, but a lot of money movement is happening actually from that perspective. Like one of the example is KaiOS. So KaiOS is like the geophones. I don't know if anyone has seen it. So geophones have this operating system called KaiOS. I think last year we did a deal with them, which enables like in the next 2 months, which will enable every KaiOS phone to actually go out and do cross-border payment remittance through stable coins in India or like across the world. So that would unlock around 120 million phones in India. So all those things we keep like helping. We still want India to win at every place. So that's what we have been doing.
No, that's great. I mean, eventually it's going to, even when Indian startups are moving abroad and multiple initiatives are being done here in India, eventually it will help us in the long run. Let's deep dive a little bit in terms of the next steps. So let's talk about tokenization, and I come to you for that, Kamlesh. So obviously you have a background. You've been in this space of tokenization and specialization for standards for a while, and with India piloting into CBDCs and the rise of currently everywhere tokenized assets, it's kind of an emerging topic. I mean, that's be it India or globally rather, it's one of the emerging topics. So how do you see that would help Indian financial infrastructure? And especially like while he's touched upon and he said like cross-border payments is a bit far, but just generally also if you can talk about that, how would it help shape our financial guardrails for that matter?
So I think tokenization is very hard, very high word nowadays. Whether it's stable coins, whether it's RWAs, asset tokenization, even like Aishwarya is leading the same segment in Polygon. So But I think in India perspective, we are not ready. Even regulatory is not ready for the tokenization. So there are clearly what SEBI says, like they're not going to allow the real estate tokenization, right? For example, thing. But I think the other segment where the people are using tokenization as a backbone infrastructure instead of the telling as a currency something. For example, recently the RBI approved one sandbox for the deep tier supply chain financing. Is not about the token, is simply using the tokenization as a technology and creating finance instruments. Another like CBDC itself is a tokenized instrument where which is a RBI approved or RBI regulated. And I think like stablecoin, CBDC could be the cross border, but they require lots of bilateral trade and other things. But I think other side of the retail CBDC, which is a very strong in India. So currently more than 20 banks are part of it, and I think a couple of banks doing a 1 million transaction a month. And I think like specific use cases are direct benefit transfer. A couple of even PM Modi always talk about it, like whether you transferring money to the women's, whether transferring to the education loan or any of the direct benefit transfer schemes. I think the greatest use of the CBDC. But other thing about the cross border or the tokenized economy will take time. But if it's the global ecosystem out there, whether it's a DTCC, whether it's a Ripple, or whether many other institutions are leveraging highly on tokenized money.
Yes, and maybe we'll get, like more by the time we reach there, and hopefully soon though, but we'll at least have exposure of their use cases, and maybe we are able to kind of, tweak them to our benefits. While Aishwarya, you've spoken about the challenges that we see in terms of, whenever we are talking about any development, like in these case today, obviously this stream of crypto and blockchain. But when collaboration is always hard, right? Like, and especially when it is so interconnected. So when it comes to fintechs and regulators and blockchain projects working together, you've spoken about what are the challenges, but then you have to throw some light on that. What are the potential opportunities that we are looking at, or like what would you like to say for that?
Sure. I mean, like I can go asset by asset. So for example, like look at cross-border payments. So effectively, like when you're going out and doing the cross-border payments, India is the biggest inward remittance market. Around 125 billion comes into India. Then if you look at the trade routes, and on an average $1.7 trillion annually is something that is processed in the trade routes. Now, on all these things, the amount of cost on an average in India is around 4%. And this is something I wrote like in Economic Times like last month. We could save around 5,000 crores just by leveraging stable coins. And that's the amount that could be saved, and it can go back to like the people effectively who are doing the transfers. So that is like on the cross-border side, that is there. I think a lot of volume is already moving on chain. So like people have already found effectively that this works. Club it with the treasury solutions. Today the way treasury solutions work is effectively if you're managing, so I used to manage the treasury for American Express back in the day, and effectively the biggest thing is that we have to always ensure that my money is always earning a return and it's never idle. Like in the banking world, you usually go out, and if it is like fund which is for a smaller duration of time, there's something called overnight funds that effectively you go out and buy out to get into, like always ensure your money is taking the returns. But these still have time locks, like you need to invest for 7 days, 14 days. If you try to withdraw the money, you always have to pay a penalty, or the interest amount is like 4 seconds. So all these things on the blockchain itself are very easy. Like that is something that you can do on the payment side. Stocks or like bonds. So I think in Europe there are 4 banks which have issued around 350 million euros worth of bonds on Polygon. They can actually be leveraged as a collateral to actually go out and borrow more. In US, so that is like the bond market. Then you have private credit. In US, like we have everyone like BlackRock, Franklin Templeton, Hamilton Lane, Apollo Credit. So all these are like top 10 folks in the US side. And like today, private credit is not accessible to people. Like if I want to invest in a private fund of BlackRock, I cannot do it. But the beauty about blockchain that effectively is unlocking is I can today like invest in a lot of those private funds because the AUM or the amount that you have to invest has drastically reduced. So you can invest like $5,000 as compared to like a minimum ticket size of like 1 million or 500K. The other thing is like I think which is also there is you can actually go out and leverage loop these assets. So with Apollo Credit Fund is a fund that has been tokenized on Polygon. You can on DeFi, like this is something which is like not anywhere done yet. You can actually use that as a collateral. You can borrow stable coins against it and you can loop it. So that fund naked gives you around 7 to 8%. On a loop gives you around 14%. So all these things are like effective. They are like fast and they are accessible when you talk about how all these things. And these are like not that they will happen. All these things are whatever I talked about right now is something which is already live everywhere today.
I agree. You kind of stole my words. I was just going to say that these possibilities that we are talking about in today's date are in fact live. I mean, right now he's given an example of Polygon protocol, but globally or otherwise also on a lot of protocols, these options or investment opportunities are already live and they're out there. So internally here for us, it's coming back to like how much conversation that we can have here in India and how can we spread that awareness, and especially, I mean, first and foremost to the stakeholders, to all the users, but primarily we need to have those frameworks, and then for all this, the conversation with the regulators is paramount. And on that note, Dilip sir, I'd like to ask you, with your experience as, I mean, you've been, Secretary General of FICCI also, you have like decades of experience behind you in terms of policy making. So if I have to compare all of us on the panel, I think you've worked extensively in terms of policy making there. So if India has to move from uncertainty to leadership in Web3, what according to you should be our top regulatory priorities today? Because like he's given so many examples, the market is humongous for people to, build so many opportunities for everybody, for people to invest and grow their portfolio. But what should be, from regulatory standpoint, be our topmost priority today?
So thank you, Neha. And the first thing is we've got to separate trading from other stuff. So, in Chris Dixon's book, Read, Write and Own, he says the computer and the casino. Okay? So, trading, so we got to look, trading, the rules are very simple. You can do it overnight. There is nothing, the only change that you need, that instead of doing it over BSC or NSE, all exchanges have come. It's very simple to do, right? So, and, it's already regulated under FIU, VASPs have to be registered, you have to do, all that is there. The big thing is, just last year, right, 14% of global engineers who joined GitHub, right, were Indian, 1.7 million, right? They're all doing work in the US without a H-1B visa. So, look at it. The whole thing is regulating for the developer, making it easier to access finance, I mean, making it easy for people to get paid in tokens, right? Getting sweat equity to founders. So there's a whole set staking, the whole GST issue of validating nodes, right? There's a whole set of things of how to empower the ecosystem here. One. Second is X to earn. The good thing about it is, with a decentralized system, it's not all about finance. I mean, Brave, which is a browser, you can actually earn points for
BAT rewards,
right?
Geosphere.
Okay. Flipverse, both based on Polygon.
Brave is right now actually very much live and a lot of Indians use it. In fact, on
it is the fourth largest browser in the world.
It is.
It's also an Indian owner company.
Yes.
The same company that I think owns you, right? Anyway.
Yes.
Okay. Then other thing is 20 odd states have done 85 use cases across the country. And the debate is, shall we use public chain, private chain, permissionless chain, token chain, no token chain? I think as a country, we have taken one decision always. We are going to be technology neutral. We're not going to push one technology. So just say, okay, this is what we want the parameters to do. This is what needs to be done. The guy can do it most efficiently, the fastest and quickest. There. The third thing don't compare everything to Aadhaar and UPI. Please go back in history, the first few years, there were no 9 billion transactions a month, or it was few thousand, right? So you can't suddenly say that we want a new startup to suddenly do X billion transactions a month at this level. Fourth. The fifth is, unfortunately, in this space, the builders who are building products are competing with the established institutions that set the regulation. And that has to change.
Yes.
So, he talked about, let's say, international settlement. You have the Bank of International Settlement who earns its revenue from that. So, we have to think a new way of regulating that going forward.
I agree. I think that's also quite a detailed response that you've given, like, tapping into multiple conversations and dialogues that we have to have, and a lot of clarity is awaiting on the table for that. If we have to take, move into a zone and move from, say, regulations to now technical frameworks, like actual regulatory frameworks, and we have to bridge that gap, or like if you have to cover that distance. So, Kamlesh, my question to you would be, like, if, say, from India's perspective, while all these are the possibilities, if we have to move from ambiguity to advantage, what technical or governance frameworks do you think we must absolutely get it right? Whenever, maybe in a year or so, we have that, but we should be very, very thorough and sure of the decisions that we are making. So, what would be your take on the framework there?
So, Dilip just mentioned about whether it's a public chain or private chain, whatever the technology. I think instead of building the framework on the technology, you should build the framework on the data specifics. So let's just define what kind of data framework you need to write on the chain, whether it's a hyperledger, whether it's a polygon, whatever chain. If it's follow the particular format or specification, then you should make the particular transaction legal or whatever the way. So instead of making regulatory or the technology framework, you should make the use cases level framework or data framework or the specification.
That's also a good point of view.
I'll just add one more point in this. So basically in India, there's only one paper that has been written by a state on tokenization, which is Telangana. I think last year, Telangana actually wrote a proper paper on tokenization leveraging ERC 3643, which is a standard. I think we all were a part of that report effectively. And after that, when the second cohort, so Telangana launched a first crypto cohort, and they selected 8 companies. We tried to help them out a lot. And when they were trying to renew this for the second year, I told them not to do it. The reason was because, as a state, when they were going towards a lot of bodies which effectively are required, even as a state, not as someone who is individual, as a state, the bodies were not engaging with them. So I told them, if other what I understand that you want to do a very noble thing, but if all the regulatory bodies are not ready to engage with you, and the regulations doesn't come clear, all these papers and all these things would not help. So, but pointing out, we need one regulator. It doesn't matter who it is, who effectively can come out and say, okay, we will regulate, we will give you the answers, and then that would be more than enough. But even that is right now missing.
No, I agree, Aishwarya. See, one thing I'll still kind of, spin like a positive note over here is that, yes, it would take time. Obviously, right now, everybody is waiting the game, from the outskirts, outliers as to, okay, if I take this decision or if I lead, when I say I, it's be it a state or a city or a particular entity, if I lead this, and this is so fast-paced technology that it takes even crypto veterans who've been in the space for the last 10 years to kind of understand as to what's happening. So it takes time for them as well. We talk about equity market, but if we think AMFI, who kind of governs the communication and all that, it has mutual fund Sahi Hai is actually more than 20-year-old campaign. So we are, as an industry, and the mother market is 100 years old. So that time it is going to take, because to governments, I would say, not benefit, but to their side, I'd say that our population today, even if this, it 7% of intraday trading grows to 10 or 15, that's going to be competing at a massive scale, right? And that's why everybody is eyeing, a lot of companies or say exchanges are, while protocols are going out for like the ease of functionality, a lot of international exchanges, I would say from my perspective being at a crypto exchange which is 11-year-old in the market, are coming to India because they see the scope of the volume that we can bring in and also the transaction volume that we can kind of add to. So the A2 feasibilities will come with it, but yes, right now obviously it's kind of a tricky business. Now, on the industry side, Dilip sir, that BWA has, like I said, has been leading the dialogue. How do you see bodies like you building trust and collaboration, across government, industry, and education?
So, I mean, what we have done as a body, and I think a lot of you are members or were members. Polygon was the founder of BWA. Then they decided to move out of India, but that's a separate issue. But Japan, Taiwan, South Korea, Switzerland have a self-regulatory framework, right? So what we've done at BWA, whether it's token listing guidelines, whether it is consumer protection guidelines, cybersecurity guidelines, fair trading guidelines, everything that is actually impacting the consumer, we've got these guidelines out which are up there. Now, very simply, if RBI wants tomorrow and they say, okay, hey guys, the Japan, or they have these 4 other guidelines, you develop that and become the self-regulatory body, it can happen overnight. And I think industry in India, both the exchanges and the developers, right, are very clear to move on and make India the capital rather than taking 5,000 Indian startups and going abroad and Polygon locating abroad. Because not only are you using talent, but if Polygon was based in India, the global revenue would have been taxed in India. And you would have earned the income. So, those are different things that we need to look at.
Yeah. So, again, education, communication, reaching out to all the stakeholders is as from the conversation is coming out, that's paramount. And Ekta, you also wear a hat of an educator. And obviously when it comes to media and media partners, it plays a key role, in kind of putting this narrative together, simplifying it for the larger users. How do you think, what are the initiatives, how can you guys come together and simplify it for the larger world? What is decentralized finance and which can eventually accelerate onboarding? So I think that's the last question and then we can.
I think something very important that we forget in the context as an investor or a trader is that Bitcoin was not born in a boardroom. It was not conceived as a financial instrument or as an asset class, as investment that it's being looked at like today. It was born as a revolutionary product. It wanted to put back the power in the hands of people so that it wanted to enable peer-to-peer transactions, and for you to be able to send value or exchange value with your neighbor, with your friend, or with your family. It was not meant to be traded on Wall Street. Actually, it was meant to be the opposite of that. But in India and most of the world, we have such a sound financial system which has not collapsed at the pace that it was being predicted before. We are not facing that crisis, at least as of now. So this is where it has turned into an asset class. It's being looked at and treated like an investment. At FXStreet, where we've been doing this for almost 25 years at FXStreet, where we gather these insights and then experts and analysts will break it down for the trader and the investor, that the crux of a particular asset class, help you cut out the noise in the market and help you identify the right signals. There's a lot of industry leaders and experts currently working on the same. There's access to a lot of information that you can have and inform yourself, be aware of how the crypto market is changing on a day-to-day and weekly basis. And I would definitely want at least this room of people to be wary of trading headline to headline, of following Donald Trump's next statement and dumping your coins, or just impulsively trading the next meme coin in the market. No, it's time for you to stop and think, because that's your capital. You're responsible for it. You're responsible for what happens to it also. Although you are being taxed for it, I don't see the protection there right now, and it's definitely, the dialogue has started, but it's going to take some time to get to that point. Like Dilip sir said, he's identified just the right areas, which would be like the first steps or the building blocks of crypto regulation in India. But all of this is definitely, certainly going to take some time, like it always does in our economy. So what we are left with is to follow the industry leaders and to make sure that where your money is invested, you're aware of it and you're making every move with the right information in your hands.
Thank you, Ekta. I think we've almost, we are at the end of the discussion here and we've summarized all the points, and the inputs have been really, engaging for all of us here. So thank you to the entire panel. I think as we wrap this up, there's this one thing that definitely there's a lot of potential for the entire crypto ecosystem, Web3, blockchain, and a whole universe of opportunities. It's that we just need to move more and work more towards building the collaboration between regulation and industry and the government and driving the education at large. So all the best to everyone, and I think if we have questions, we can quickly take 1 or 2 questions at the most.
Check. All right, do we have any questions? Yes.
Hi, so my name is Jay. Thank you for the panel discussion, by the way, it was great. I'm working on an RWA tokenization platform, and my question is directly to Aishwarya. I'm sorry to single you out, but we already heard from Kamlesh sir about the aspect of CBDC. How do you, being a part of Polygon Labs, feel about the aspect that CBDC is something that the regulatory frameworks are focusing on? And do you think it's maybe not a cover, but something that lets them avoid looking at public blockchains in the future?
Okay, so I've been though being a part of Polygon, I have in the last 1 year, so we've invested in a startup which the twofold roles of that. One is to actually study the technology that is being built in India. The fundamental challenge, okay, forget about all this technology, who's building, what is building. The fundamental technology about stable coins. Why does stablecoin work? Is because there is something that you can buy through stable coins. Okay, so imagine you want to buy, let's say you want to just send your friend some money internationally, so or you want to buy an NFT or anything, for example. What it enables you to purchase that asset. Okay, now think about UPI. Why is UPI so prevalent? Because you go anywhere in India and UPI is accepted. Yeah. The fundamental difference between on what CBDC is built on is CBDC is something which enables the same use cases in UPI. Now, the challenge is, for me as a normal user, is if I hold my money in a bank account, at least I'm generating my interest, saving bank's interest. But if I'm holding my money in CBDC, I don't get that. So there's a fundamental disadvantage to doing that. And then the question comes in, can I add something on top of it? Or is there a new use case that gets opened up? Right now, the answer is no. So there are ways in which the same CBDC can become interoperable and can allow you to buy assets on the blockchain. It doesn't have so that is one way, and the other way is you build all those assets on the same stack where CBDC is compatible. Now the second thing is super difficult, and it's a very long process because right now you need to find the developers. The stack for CBDC is Hyperledger Besu. So Besu developers, finding them, it's very difficult. Most of them are either sitting in NPCI or banks. So that is the fundamental challenge. However, so that is a long period of time. Over period of time can happen. But effectively, if CBDC can solve this, then CBDC works. There's nothing different in that.
But who do you think will lead the charge in handling this? Is this the banks? Is this NPCI? Or is this RBI? Who decides whether we as a platform get access to it?
Answer. So actually it's RBI decides. So because it's a RBI product, not the NPCI. So RBI decide what use case or even how the money distribution works. The same way you need to approach to any of the banks who are piloting or doing the CBDC. And I think stake is Besu, not Besu, actually Fabric. And I think couple of use cases even banks are trying. So let's say some carbon credit being done in Maharashtra as well. Then some use case on the direct benefit transfer. And now whatever you can think, they have some programmability feature out there. and so you can build, but everything comes via the RBI, what RBI need to approve.
Thank you.
Thank you. Thank you so much. Well, we are out of time, sir, so we'll not be able to incorporate any further questions. Can we take one question? Okay, one quick question. So we just have 1 minute. Quickly, please.
Sir, please throw some light on crypto mining.
See, I think crypto mining is a way in which effectively you can go out and generate tokens by going out and working for it. Very simply put, what is crypto mining is it. So if you have to build a system which is not governed and controlled by a centralized authority, there has to be a mechanism through which you cannot cheat the system. Historically, like coins have existed in the world since 1980s, like some coin random, all these things have happened. And the fundamental challenge that all these coins have had was how do you ensure there is no double spend, which is like if I have 10 rupees in my pocket, I don't spend that 10 rupees for, at two different places. And that is why nobody had been able to solve that. So what Bitcoin actually solved was something called a way in which you can avoid double spending without trusting any centralized party into it. Now, in order for you to kind of go out and show that you have actually gone out and you have performed work, there's a consensus mechanism that has been created which was called as proof of work. Now, this proof of work, any blockchain that incorporates proof of work, what you effectively are doing is you're giving your compute to go out and find solutions. So effectively, when you give compute, there is a cost to that compute. So the assumption is if the amount of energy or the amount that you have spent to solve for that compute or keep the system honest is more than the amount you will get if you corrupt the system will work automatically. And this in a terminology is called mining.
So is it possible in India to do crypto mining?
Mining is possible anywhere. Yeah, there are a lot of people who do it here in India also. I don't think there's a problem in mining anywhere.